Good afternoon, everyone. Ladies and gentlemen, welcome to our sharing about China equity market and the macro outlook and the key investment themes. Today, we will focus on three parts. The first one is about the macro outlook. We will look through for the history of Chinese macroeconomic performance, and then we will look forward. The second part is we will talk about the policy drivers of the development of Chinese economy and also for the specific industries. And the third part, we are going to talk about some specific sectors that we believe will offer compelling investment opportunities in the future. Okay, first, let's look back to the history of A-share market. You know, A-share market is an emerging market. Emerging market means it can present a dynamic landscape where economic growth engines may shift from time to time. This can give rise to a lot of new investment themes. As we can look into the history from the first part, that is from 2009 to 2012. We call it the period of the rise of consumer. Rise of consumer means in that time, the A-share is driven by the consumption-led growth, like the food and brand name liquor. It is particularly high-end, especially for the high-end liquor delivered by they will deliver some exceptional returns. And then for the second part, it is the Internet Plus. Internet Plus means at that time we see an explosion of mobile internet penetration fueled by a boom in the TMT sector. You know, TMT sectors, the first T refers to the technology. Second, the 1M means media. And the last T means telecom. At that time, we see the penetration and the development of the internet. So the industry of technology, medium, and telecom, they provide exceptional returns. And then for the third part, that is from 2016 to 2021, we talk about that time, we mentioned blue chips. Blue chips refers to some liquor equities. There, at that time, we see a dual focus on the first part is about the pharmaceutical innovation, and another part is at that time we see a renewed cycle in the liquor industry, which can capture investor attentions. And also at that time, from 2016 to 2021, we see a lot of overseas global money, especially for the long-only money, they entered into the A-share, also the H-share markets, and they earn a lot of make a good returns. After that, we move into the 2020 to 2022. At that time, we talk about advanced manufacturing, especially for the new energy. At that time, we can see the process of industrial upgrading and the global push for the decarbonization. And all this propelled the new energy sector in China to have good performance. After that, that is from 2023 to now, we can see the industry or the good industry we mentioned is about artificial intelligence and also biotech. And we can see from 2023 to now, we see the emergence of new productive forces with AI and biotech. They're leading to the achieves breakthroughs on the global stage. You know, as an emerging market, Chinese markets, they provide an emerging landscape. And historically, these themes have been driven by a confluence of macroeconomic shifts, industrial policies, and technology innovations. And all this leading to a sustained earning growth in some specific or favored sections. So, before looking back to the history, we have to focus on the macroeconomic of China just now. As we can see, Chinese economy has been in the phase of sustained recovery. The real GDP growth on the left side, they accelerated from 4.6% in 2024 Q3 to 5.5% in 2025 Q1 and 5.2% in 2025 Q2. So for a demand side perspective, we can see on the right, there are two engines that help our GDP rebounded. The first one is exports. The exports is demonstrated in the yellow one. It means net exports. The exports in the previous quarters, we can see it is fueled by the global manufacturing recovery and the front loading. Another engine of the GDP or the economic recovery, we call it is consumption. For consumption, and on the right, we can see it in the gray part. It is engined or it is promoted by the government, trade in for new stimulus program. Trade in for new means if I want to buy a refrigerator, then the government will give me a lot of subsidies. Yes, subsidies. Then more people can make more consumptions in the kind of buy new and sell the old one. It is really effective. This part is from the demand side, but also we can move to the supply side. From the supply side perspective, just like on the left, we can see the industrial and the information technology sectors. They have been the primary engines of this economics resurgence. And also the finance and construction sectors have weakened marginally these quarters. When we move to the demand side, many foreign friends may ask me whether your real estate sectors is still a drag on China's economy resurgence. And now I put it in red that we can have a look at it. We can see in 2024 Q3, 2024, and also the third quarters of 2024, also for the last quarters of 2024, these three quarters, the red part is still below the zero line. But when we move forward for the last quarter of 2024 and also the first two quarters of 2025, the real estate have already act as a drag proportion of our GDP growth. So I believe we no matter need to worry more about this part as a drag of the GDP growth. And also after that, we can see the future of the economic fundamentals. We see a picture of recovery very clearly. And in this part, we can see we divided the growth future of our GDP into 4 parts. And for the first one is from the retail part. The second one is for the fixed asset investment. The third part is for the exports. Also, we can divide them into more detailed parts. And for example, in 2025 H1, the first half of 2025, China has seen a notable recovery. And we see the primary drivers behind it were the exogenous export demand in the middle, uplift, and it impacting the industrial sector's recovery in fiscal revenue, and the government's trade-in for new policy also stimulating the wholesale and retail service sectors. When we're looking ahead, we anticipate that the government fiscal policy, including the expanding deficit, will continuously provide further support for the economy. And this will pave the way for a sustained economic recovery cycle. And to summarize to the first half of the 2025, we witnessed a notable recovery, and we believe this recovery will continue in the second half of this year. After talking about a lot about GDP growth and its components, now let's move to the crucial policy driver, that is technological self-reliance. With the increasing global uncertainties, as we all know, at the beginning of this year, we see the trade conflicts between U.S. and China, between U.S. and all kinds of other countries. This is the global uncertainties. Under such kind of environment, China has elevated our own technological independence to a quite strategic national priorities. It means that China has made this technological self-reliance a strategic national priorities. This commitment is expected to enshrine the top-level policy arrangements, such as the 15th five-year plans. Maybe the 15th five-year plans will appear in the next year. When we look back to the 14th five-year plan from 2021 to 2025 and the Vision 2035 outline, it mentioned that we have to establish technological self-reliance as a strategic pillar of national development. And also after that, at the beginning of last year, we see there is an issue. The central government issues a specific implementing roadmaps for promoting the innovative development of future industries. And these future industries, including the new quality productive forces. So what are the new quality productive forces? We will find out more in the next slides. And then after that, in 2024, we see the 2024 government work report. This is the central government work report. It mentioned that we have to accelerate the systematic development of major science-tech infrastructures. And also it points to three main such kind of science-tech infrastructures. The first one we see is AI, artificial intelligence. The second one is robotics. And the third one is about semiconductors. And we believe for these so-called new quality productive forces, they will endure a lot of investment opportunities in the futures. So now let's go into these three investment opportunities one by one. The first one is we can see it is advanced manufacturing. China acts as a global leader. There's no doubt. And in my opinion, the advanced manufacturing in China can be divided into two parts. The first one is about the battery, and the second one is about EV, electric vehicles. And this brings us to our first key investment theme. And China has emerged as a global leader in this space, particularly in the electric vehicles and the batteries. As we can see on the left, about the batteries. The batteries supply chain, we divided into three parts. The first one is about the raw materials. The second one is about components. And the third one is about the products. And we can see in all these supply chains, the dark blue part belongs to China. It means China has established a dominant position in the global battery supply chains. And also for the electric vehicles on the left part, we can see this show the top three countries of auto exports from 2019 to 2024. And we can see the dark blue line represents China. And we're happy to see that since 2023, China's proportion exceeds Japan and also Germany to become the largest country of auto exports. You know, maybe for yesterday evening, when I arrived at the airport and I called a taxi through the Grab, you know Grab, and then one vehicle come to pick me up, and the brand of the vehicle is Build Your Dreams. And you know, Build Your Dreams is one of the most famous electric vehicles provided by China, and I feel very glad to see the auto produced in China can be exported to Thailand and can provide services for the people here. So, in a word, electric vehicles, China emerged as the world's largest auto exports. This has been achieved through a combination of supply chain efficiencies, and also we make relentless innovations, and also we have the competitive domestic market that can help us to offer the local champions. Also, China's electric vehicle automakers can capture both the end of the markets, offering not only economical options They're very cheap, right? And also, these kind of automakers, they can lead the premium segment of outstanding vehicles and services. So we think in the first areas is about advanced manufacturers, and China is a global leader. Okay, now let's move to the second part. The second part is about artificial intelligence. We believe that China AI app users base expanding rapidly in the previous 1 year. First, let's look into the ChatGPT. I know everyone knows ChatGPT, right? Yes, you say yes. And we can see that on the left, the ChatGPT's weekly active users. In short, we call it WAU. It is weekly active users. How many people use it? We can see the users have already reached 400 million in the February of this year. And also, when we look back into the history, it doubled since the August of 2024. And it is projected to double again maybe in the second half of 2025. The accelerated expansion is likely to be driven by the enhanced model capabilities and also the emergence of new use cases. Also, we can see does this trend appear in China? Is there any good competitors in Chinese markets? Yes, we can see. On the right, we see there are 4 China AI apps. They are Quark, Doubao, DeepSeek, and Yuanbao. And we see the monthly active users for these apps also increase very steadily. The monthly active users for Chinese AI apps in China, including these 4, they are emerging in maybe from the beginning of this year, and they act as a very important part of the global AI app. For example, for Quark, we already have 150 million WAU, and for Doubao is about 120 million, etc. But in the future, we think this trend will be enhanced because on the left, we can see the cycle. It is a cycle start from AI model provided by Chinese companies, maybe like DeepSeek, etc. And the second step is about AI applications. In China, we have the human rights robotics, auto-driving, and AI agents. They are all AI applications. And the third step is about computing power infrastructures. It is also important to develop such kind of AI industries because we can see that some domestic semiconductors and computing infrastructures companies, they worked really well in the previous several months. In this cycle, I call it the interconnectedness of Chinese AI ecosystem, the interconnectiveness. Why it is interconnectiveness? Because a virtuous cycle, we see they are emerging in China industry, AI industry, because the advancements for in the fundamental models driving the development of new applications. And also, which in turn, this will fuel the demand for domestic computing infrastructures. This is a self-reinforcing loop, and this will create a resilience in the internal driven growth dynamic for this AI sector of China. And also, on the right, we can see some major TMT companies is projected to increase their AI computing power investment by an additionally 200 billion RMB in the future. This trend is driven by the growing demand for advanced AI applications because improved data processing capabilities and the need to stay competitive, among others, in such a fast evolving digital landscape. They have to invest more in these areas. And the top companies, as we can see, A, B, C, D, are really well famous. They are Alibaba, Tencent, Baidu, and others. I hope you know what they are. I believe that these companies, they are investing in the cutting-edge hardwares also the cloud infrastructures and innovative software solutions to enhance their AI capabilities, because they have to competing with each other in China. Okay, now let's move for the third one, and the third one is about the innovative pharmaceuticals. We say that the Chinese innovative pharmaceuticals is going global and re-evaluations. So first, going global. As you can see on the left, China's pharmaceutical industry is undergoing a profound transformation, becoming a significant player in the global market. And on the right, you can see this shows the number of innovative drug pipelines in China and also other countries. We can see the first one is US, and with 5,268 projects, US lead this track. And then the second one is China. China is making considerable strides in research in this sector. Although US maintains a notable advantage, but other countries, they are much more lower. So this is competing between US and China. And China, we have 4,804 such kind of projects. And with this evolution, we can see there is an index in China called Innovative Pharmaceutical Index for the Hong Kong markets. It have already improved or have get the profits for more than 100% since the end of the last year, since till now. It rises for more than 100%. And also, this is being recognized. This trend has already been recognized by a lot of multinational pharmaceutical companies. They are increasing licensed drugs from Chinese biotech firms, and this leading to a fundamental re-evaluation of the sector in China. We can see year to date the trend on the left of such kind of multinational pharmaceutical companies acquiring innovative drug patents from China has remarkably accelerated, with the total transaction value from January to June this year already surpassing the volume for all of 2024. This is the last column. It is about 635. It has already surpassing the volume of that of the whole year of 2024. So this is a quite strong trend. So now let's till now we have already finished some specific track or specific sectors that we really we believe that will provide good benefits. And at last, we are going to talk about the overall performance of China's equity outlook. For one word, it will be a Davis double play. You know Davis double play. We can see on the right side, this line demonstrates the proportion of the high growth industries. High growth industries means the industries that have over 30% net profit growth. This percent or this proportion of the high growth industry has already on the rise trend. And you know, in 2021, this one have about 100. All the sectors, they have the rising proportion, have a rising net profit growth rate. But now, for the recent 3 years, the performance of Asia market is not quite good, but we have already seen the trend to recovery. This is the first point from the point of sectors. And then on the left, we can see while the corporate earnings may face some headwinds in 2025, the Q3 2025, due to a slowdown in exports and the pricing pressures, but we still anticipate the upward inflection points will appear in the fourth quarter of 2025 because the earnings recovery and the valuation remain attractive. The A-share market is well positioned for Davis double play. Well, why the EPS will recover? How can we get such kind of conclusions? Because we use the picture on the left. You can see on the left there are two lines. The first one is the earning per shares. It is the earning per shares growth rates. And also the light blue line, it means the savings of households and companies. The gap between the savings of households and companies. We can see that the second indicator is a 12 months leading indicators of the earning per shares growth indicators. In history, it matched quite well. It is a 12 months leading indicators. And we can see if this kind of rules still work in the future, maybe the turning points or the recovery points of A-share earning per shares growth rates will appear at the fourth quarter of this year. At that time, we can expect a Davis double play. So I believe that for this time, we can invest in the China's A-share markets, and maybe we can expect quite good earnings till the end of the year. And this is the last page of my presentations, and I'm happy to share with you about my opinions and our perspectives of the A-share markets and also the macroeconomic conditions. And we wish everyone have a good benefits and earn a lot of money through this kind of fall of products. Thank you.